here at Crypto. David, let's talk about the wild ride we've been on. We're just a little shy of 40 grand right now. Obviously, that's a bit disappointing for anyone who got in at, 62, 63, 64. What do you think's really behind all these wild moves?
Yeah, absolutely. First, I just want to say thank you for having me on the show. Very excited to be here. I think that if you're going to be an investor in crypto and Bitcoin, I think the first thing to remember is it's a risky asset and it's volatile, but it doesn't necessarily mean that it's a poor investment or that it's something that investors shouldn't hold. So we've been, bullish on Bitcoin. We issued a buyback in 2020, and we've remained bullish on it. We have a price target of 100,000. For the year. We're also bullish on Ethereum and a number of other coins as well. But, I think that if you look at, the run-up that we've had back in April when the market hit, really what it recently was a peak from right around the Coinbase IPO, I think there was quite a bit of euphoria that really entered the market at that time. And, what we saw after that was, I saw institutions starting to get a little more bearish on the crypto space in general. We can see this from some comments that existed from some bigger folks out there on Wall Street. And, we just saw this mania almost of retail entering the space, and that was the Dogecoin things that happened and all the stuff on Robinhood. And what happened from that was we got a little overextended. Some folks, probably got a little too leveraged. April, we saw a sell-off that kind of took out some leverage. And then we saw some kind of negative news flow hit that, was a couple of things like you mentioned, Elon Musk and the ESG concerns with mining, as well as, what happened recently with China. And again, we'll note that that's happened many times, so we're not, we're not super bearish on the Chinese news. And that really took out a lot more leverage and forced liquidations that forced quite a bit of selling that we saw over the last couple of weeks. And that actually scared the market quite a bit. That took us down, really for a very short period of time, very, very far, very fast. But then we've bounced since, and I think we've stabilized here. And happy to talk about kind of, our shorter and medium-term outlook. But that's kind of the recap as to what's been driving the recent moves we've seen.
Before we get past what had driven the moves, I agree. When you take a look at what's happening, when China came out, you said, well, surprise, surprise. But the Elon stuff, I mean, if you're a cryptocurrency enthusiast, did that feel like a betrayal to a certain degree?
I don't think so because, we put out a note. We thought that actually Elon could be good for crypto in the long term. So, when we put out that note, when the announcement happened, we postulated a couple of things that Elon could do that could kind of improve the ESG image of crypto. And I think you're actually seeing that now with what has happened with some of the minor mandates that are being pursued today, where they're going to start producing more transparency around how they mine Bitcoin with, environmentally friendly methods. And I think one reason that could actually be good is because if you think about the institutional assets under management, a big bulk is actually held in ESG-related mandates. And, if Bitcoin gets more ESG friendly from at least a narrative perspective, and narratives matter, and we don't necessarily, again, as an aside, hold the view that Bitcoin's bad for the environment, but narratives matter, it could actually open the door for a larger TAM of investment capital. So that's actually possibly something that could be a benefit to the space.
I mean, would that be one of the catalysts you're talking about of taking it to your price target of 100,000? Because that seemed to be the feeling over the winter, right? As more and more established institutions said, well, we're going to hold a little crypto as well. That seemed to be the legitimacy it was looking for that I feel like it's been shaken in recent weeks.
Yeah, I think that institutions started to get kind of short-term bearish on crypto, or at least started talking down the market. We saw a few doing that, back in after the Coinbase IPO, and it makes sense, right? Because there's Wall Street is built to kind of build attention around the Coinbase offering. And I think after that passed, I think you saw maybe, a cooling off of that focus. But I think that there's definitely a lot of institutions that are trying to get into crypto. I think they're probably using the sell-off we're seeing now as a moment to accumulate. It's something that, we're talking to clients a lot more about these days. And we're getting a lot of traditional folks who are really kicking the tires and some putting on positions. So I do think that that's something that's definitely happening over the medium to longer term. The shorter term things that we're seeing that give us a little more confidence in kind of where the market is at, it's really three things. The first thing that we see is there's just massively reduced leverage. The market hasn't been this deleveraged based on some metrics we look at since the beginning of this run, which back in 2020, which is very good, because if the market builds up more leverage, that's one way for, as you know, demand and prices to move higher. The other one that we're looking at is the VIX, the Bitcoin VIX, that is, which is a measure, in some respects, of the volatility of the fear in the market. That spiked very high with this recent sell-off and has been coming down. And if we're looking at what that spike, how the materiality of that, it was almost as high as when back in January we thought that the Fed was going to have to raise rates. We saw that interest rate tantrum, and the whole market was afraid that the economy could fall apart. And I don't think that Elon Musk is as scary as the Fed in that respect. So I think that maybe that's a signal that the market could be very fearful, and potentially, if that comes down, could be room for kind of climbing the wall of worry. And the third thing is there's an options expiration date tomorrow. And historically, over the last year, and most recently over the last few months this year, right, like it has been a bullish event following the options expiration. So that's one thing that actually gives us kind of short-term a bit of comfort and a bit of bullishness into the next week and couple weeks.